In today's video, we'll take a deep dive into how candlesticks are formed and how to read them in the markets. Why are green candles, red candles, wicks, and patterns so important for traders? If you want to improve your technical analysis, identify trend reversals accurately, and strengthen your trading strategies, make sure to watch the video until the end. Don't forget to like the video, subscribe, and turn on notifications. What is a candlestick? A candlestick is one of the most popular chart types used to visualize price movements in financial markets. It represents the opening, closing, highest, and lowest prices within a specific time frame in markets such as cryptocurrency, forex, and stocks. Candlestick analysis helps traders better understand price movements and predict future trends when conducting technical analysis. Green candle, bullish candle indicates that the price is rising and buyers are in control. Red candle, bearish candle indicates that the price is falling and sellers are dominant. Parts of a candlestick, meaning of the body and wicks: opening price, open, closing price, close, highest price, high, lowest price, low. Candlesticks are made up of two main parts: wick and body. Let's first examine the body. Green, bullish candle: if the price has increased, the closing price is above the opening price. Red, bearish candle: if the price has decreased, the closing price is below the opening price. What do the wicks represent? Wicks show the highest and lowest price levels reached by the candle. Upper wick indicates the highest price reached during the time period. Lower wick indicates the lowest price reached during the time period. Essential candlestick types to know. 1. Marubozu candle indicates strong trends. 2. Doji candle, a sign of uncertainty, indicating market indecision. 3. Hammer and inverted hammer can be a trend reversal signal, especially significant at support levels. 4. Shooting star and hanging man, high probability of price direction reversal. We'll be covering one of the most important topics in technical analysis for understanding price movements in the markets: essential candlestick patterns. If you want to understand what candlestick patterns really tell us, don't miss this video. What is a Marubozu candle? A Marubozu candle is a special candlestick pattern that indicates a strong trend and has no wick, shadow, on its body. It represents strong buying or selling pressure in the market and provides a clear indication of the trend direction. Characteristics of a Marubozu candle: it has no wick or only a very small wick. The opening price is almost the same as the highest or lowest price. The closing price represents a strong trend depending on the candle's direction. For example, what is a doji candle? A doji candle is a special candlestick pattern that indicates uncertainty and market indecision in financial markets. The most distinguishing feature of a doji is that the opening and closing prices are very close to each other or exactly the same, meaning the candle has little to no body. This situation reflects a balance between buyers and sellers, showing that the market is at a point of indecision. Traders interpret doji candles as a potential trend reversal signal or an indication that the market is pausing. Standard doji: the opening and closing prices are almost the same. It indicates a balance between buyers and sellers in the market. Should be analyzed with other indicators to determine if a trend reversal or continuation is likely. Dragonfly doji has a long lower wick but little to no upper wick. Indicates that buyers push the price up, which may signal a strong reversal, especially at support levels. It can suggest the beginning of an uptrend or the continuation of an existing bullish trend. Gravestone doji has a long upper wick but little to no lower wick. Indicates that sellers took control and pushed the price down. When seen at resistance levels, it can signal a potential downward move. What are hammer and inverted hammer? The hammer and inverted hammer are important single candlestick patterns that indicate trend reversals in the market. They typically appear at the end of a downtrend, signaling a potential bullish reversal. Characteristics of the hammer and inverted hammer candlestick patterns: it has a small body with a long lower wick. The wick should be at least twice the size of the body. The upper wick is either non-existent or very short. It appears at the end of a downtrend, signaling buyer strength and a potential reversal. Shooting star pattern. The shooting star is a bearish reversal pattern that appears at the end of an uptrend. It indicates that buyers initially pushed the price higher, but sellers aggressively took control and drove the price down. Characteristics: has a small body and a long upper wick. The wick should be at least twice the size of the body. The lower wick is very short or non-existent. Forms at the end of an uptrend, signaling that sellers are gaining strength. Hanging man pattern. The hanging man is a candlestick pattern that appears at the end of an uptrend and signals potential weakness in the trend. It shows that sellers attempted to push the price lower, but buyers managed to bring it back up. Characteristics: has a small body and a long lower wick. The wick should be at least twice the size of the body. The upper wick is very short or non-existent. Forms at the end of an uptrend, indicating that buyers may be losing strength. Most important double and triple candlestick patterns: bullish engulfing, bearish engulfing, critical indicators for trend reversals. Morning star, evening star, indicate momentum shifts in the market. Harami pattern, used to identify potential trend reversals in the market. 3 white soldiers, 3 black crows, represent strong bullish and bearish trends. What is bullish engulfing, bearish engulfing? Engulfing patterns are 2 candlestick formations that provide critical signals for identifying trend reversals. These patterns indicate the potential for a price movement change and are considered strong trend reversal signals by traders. Bullish engulfing candlestick pattern. A bullish engulfing pattern appears at the end of a downtrend and signals a potential upward price movement, making it a strong bullish signal. Characteristics: the first candle is red, bearish candle, indicating a price decline. The second candle is green, bullish candle, and completely engulfs, covers, the previous red candle. This pattern suggests that buyers have taken control and a trend reversal to the upside may occur. Bearish engulfing candlestick pattern. A bearish engulfing pattern appears at the end of an uptrend and signals a potential downward price movement, making it a strong bearish signal. Characteristics: the first candle is green, bullish candle, indicating a price increase. The second candle is red, bearish candle, and completely engulfs, covers, the previous green candle. This pattern suggests that sellers have taken control and a trend reversal to the downside may occur. What are morning star, evening star? Morning star and evening star are 3 candlestick trend reversal patterns that provide important signals for traders. These patterns indicate momentum shifts in price movements and suggest the potential for a trend reversal. Morning star pattern. The morning star is a bullish pattern that appears at the end of a downtrend, signaling a potential upward movement. It indicates that selling pressure is decreasing and that buyers are starting to gain strength. Characteristics. First candle, a large red, bearish candle, confirming the continuation of the downtrend. Second candle, a small-bodied candle, can be red or green, indicating market indecision. Third candle, a large green, bullish candle that should close above the closing level of the first red candle. Evening star pattern. The evening star is a bearish pattern that appears at the end of an uptrend, signaling a potential downward movement. It suggests that buyers are losing strength and sellers are gaining control. Characteristics. First candle, a large green, bullish candle, confirming the continuation of the uptrend. Second candle, a small-bodied candle, can be red or green, indicating market indecision. Third candle, a large red, bearish candle that should close below the opening level of the first green candle. Bullish Harami pattern. A bullish reversal pattern that appears at the end of a downtrend. It indicates that buyers are starting to enter the market and selling pressure is weakening. Characteristics. First candle, a large red, bearish candle, confirming the continuation of the downtrend. Second candle, a small green, bullish candle, which remains within the body of the first candle. This structure suggests that the downtrend is losing momentum and buyers are stepping in. Bearish Harami pattern. A bearish reversal pattern that appears at the end of an uptrend. It signals that buyers are losing strength and sellers are taking control of the market. Characteristics. First candle, a large green, bullish candle, confirming the continuation of the uptrend. Second candle, a small red, bearish candle, which remains within the body of the first candle. This structure suggests that the uptrend is weakening and sellers are starting to dominate. Three white soldiers pattern. The three white soldiers pattern appears at the end of a downtrend and signals a strong bullish reversal. It indicates that buyers are gaining control of the market and upward momentum is strengthening. Characteristics. Consists of three consecutive large green, bullish candlesticks. Each candlestick opens near the previous candle's closing price and closes higher. Candles with large bodies and small wicks, shadows, provide a stronger signal. Indicates buyers' dominance in the market and the beginning of an uptrend. Three black crows pattern. The three black crows pattern appears at the end of an uptrend and signals a strong bearish reversal. It indicates that sellers are taking control of the market and downward momentum is strengthening. Characteristics. Consists of three consecutive large red, bearish candlesticks. Each candlestick opens near the previous candle's closing price and closes lower. Candles with large bodies and small wicks, shadows, provide a stronger signal. Indicates sellers' dominance in the market and the beginning of a downtrend. We've reached the end of today's video. Today, we took a detailed look at essential candlestick patterns and learned how they can be used in the markets. But if you want to dive deeper into technical analysis, in our next video, we will start exploring harmonic patterns. If you found this video helpful, don't forget to like, subscribe to the channel, and turn on notifications. Wishing you profitable trades.